Very warm welcome. I am Pranav Jadhav. Today I am going to share a presentation on the subject financial accounting, and the topic for the subject is accounting standards. So very first thing we need to understand about is the what is accounting standards. So the accounting standard are the uniform, definite and universally accepted accounting rules developed by the International Accounting Standards Committee, and these are known as the accounting standards. So there are different types of rules and concepts which was been adopted in the different parts of the world. So it was getting too much complex and complicated to deal with the different terms of accounting. So to get rid of this situation, the universally accepted accounting standards was been established and it came under existence, which were been helpful in the further process. Now we will understand about the what are the objectives of accounting standards. So the very first objective we will study is about the removal of ambiguity. The removal of ambiguity means there is a lot of confusions and lots of confusing terms which are being adopted. But due to removal of ambiguity through the accounting standards, it has been done in such a way that the all the confusions like the confusions in the liabilities, the shares were been removed through the accounting standards. The second one were been the prevention of accounting scandals. The ambiguity, the confusion and the inexistence in the meaning of accounting terminology generates the accounting scandals leading to the failure of the business. So for example, taking the term price may define as the cost price, the sales price, etc. Everyone can choose their own term to understand. Therefore, the scandals may happen. Therefore, to remove this kind of scandals, the accounting standards were being introduced. The third objective was the globalization of the accounting, globalization of the business. So in globalization of business these days is globally entity. We have got a many multinational corporations working in different countries with the different currencies and rules and practices. The fourth objective is the internationalization of financial institutes. The banks and the financial institutes have assumed a globally status. These activities are not restricted which their countries alone. The successful implementation of these activities needed that the financial accounting must be standardized internationally. So now we will be studying about the different types of accounting standards. The very first one we are going to start with is about the disclosure of accounting policies. So the disclosure of accounting policies is termed by the serial number AS1. It is issued to all the chartered accountants in India. It helps in the preparation and presentation of the financial statements, and it varies from the enterprise to enterprise. The second type of the accounting standard that we are going to study is about the valuation of inventories. That is the serial number AS2. So in this type of valuation of inventory, we are going to study about what is exactly the inventory valuation, what are the sold value, how much stock is left in a warehouse, and how to evaluate it in such a way that it gives a profit to the firm without any wastage and without any scandals and any ambitious activities. Therefore, the valuation of inventories were being introduced. The third factor that we are going to study is about the accounting for fixed assets. Fixed asset is also known as the tangible assets. It may include the land, building, factories, furniture, equipment, etc. Whatever the assets which are in terms with the capital is known as the fixed assets. So accounting standards help out with the accounting for the fixed assets, and the serial number for that was the AS10. So these were the above accounting standards and the different types of accounting standards that were being shown in the PPT, and that's all my PPT was all about. Thank you so much.